The following is a presentation of TFNN. The Global Market Pulse. With your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. It's good to be back. Just got in from Asia literally hours ago and had some delayed flights. It was a 5-leg flight, and I'm glad to be out of the airports for 42 hours. I think it was. Nice stretch there. So good to be back with you guys. Lots happened since I was gone. We talked, by the way, it's chilly in this country. Oof. Had some nice balmy weather when I left Asia, and I think it was 0 last night here in North Carolina where I'm at, so somewhat shocking. We talked last week about, had a little webinar on the scanner last week, and talked about the breadth, and we talked about some of these crossovers. Here's the S&P 500, and here's our speed dials up at the top, or speedometers as I like to call them. And this daily, this is our admin version. We give you the dials up here on the version that you subscribe to if you subscribe to it. And these crossovers started happening. I'm going to show you on the charts here back in, well, if you're our daily chart here. We talked about the crossovers really not happening in a large way. And let me just point out the dates here. Between the 9th and the 10th, we had that crossover. So on the 10th, we had the close crossover. On the 9th, we were getting close. So as we look at the 9th, 10th, let's just call it the 10th close. Let's go back to our charts here. Let's look at the S&Ps. We're looking at the December contract right now. Here's our daily, and there's the 10th. So we got that crossover close here on the 10th. And we actually, while the breadth was negative, and this is really, really important, we had talked about the weeklies not really being crossed over yet, so the long-term breadth is still kind of positive here, and the weeklies are a very strong signal. We've gotten some great weekly forecasting signals before, but as we look at the breadth on this piece of the scanner, we're still positive breadth actually on the long term. But the dailies usually cross early. That's going to give you a little bit earlier signal most of the time, and that daily crossover, as you can see by the chart, happened on the 10th. So as we rallied back, and this is really, really important what I'm getting ready to tell you, as we were getting into breadth negative situation, and that, if you want to, I think TFNN's got a recast of the webinar that I did up on their site somewhere. I'm sure you can find it if you poke around a little bit, and maybe I'll get a definite destination point for that archive video before we get off the air today. But, it talks about how to read the breadth against some of the inflection points on the indices themselves. And I was just notified you need to sign up for a free trial to gain access to that archive, but you can still do it. And so signing up for a free trial to the scanner, which I'll be showing during the show again here. Here's the scanner. You'll be able to get access to that archive. We had a couple of technical difficulties in the webinar itself, but I think we cleaned them up for the archive, so it's a really good recording in my opinion. And we talk about things like this. We talk about breadth being negative and then going back and using these inflection points now that we have negative breadth on the daily, of being able to pick some battles with conviction a little bit more so on the short side. As we came back Thursday, the day I had started my travels, Thursday, going back up into that 2059 area, we reached a high that day of 2056.50. Let's just call it 2057 rounded off. So we got very close to the inflection point. That was the breaking point of the cliff, so to speak, for the S&Ps, showing that technical damage on the intermediate term. So as we rally back into that, breadth being negative, it was okay to start picking some battles on the short side, even though we had some mixed up signals between the weekly breadth and the daily breadth. The daily breadth on an intermediate basis, we can start looking at that from the short side. So now as we've drifted down, still breadth negative on the intermediate, and we're obviously pre-market here. Let's look into the weekly. And as we can see, as of last week, we had that big yellow bar close down in and down below our weekly unfair highs at 2014 or 2014.50. So that was pretty damning for the longs. Still don't have to have the weekly breadth negative, but the daily breadth negative and being able to use some of that leverage around 2059 and actually close below 2014, that's not very good for the longs, put it that way. So as we look at the new weekly box that has appeared and concreted itself in, you've got some pretty serious long-term inflection points to pay attention to now, which is 2014.50, 1975.63, and this is the December contract, and well above 2079. So again, this morning, and apologize, folks, let me turn off something here. This morning, as we see that new box appearing and as we see price, and let me just get a concrete price here, 2011.50, we've been as high as 2015.50. So we've come back into like the close below, coming back into former support, now resistance possibly. You got to pay attention to this number now. So we've reached with a little bit of noise factor, basically rallied back up into that inflection point that we closed below on Friday on the long term. And as we look at the daily situation, we have a possibility, since the breadth is negative on a daily, we've closed below on the weekly, those unfair highs, we've rallied back into former support, now resistance. We may have seen the highs for today already. So be aware of 2014.50 based on all the things that I've just stated. If we can get back above 2014.50 and kind of consolidate above there, we actually may move higher. So stops more than likely. And again, these are the facts. We're in the ballpark of 2% off all-time highs. I wouldn't call this, everything's going to hell in a handbasket situation as we sold off here. We're down about 2% off all-time highs. So just put that in perspective if you can. And as we are kind of trailing down, breadth is negative, we rally back up into some inflection points. I think we're up about 13 or 14 S&Ps this morning from Friday's close. We may have seen today's highs at 2014.50, but if we get past there, where you can kind of orient stops on the short side. And the next stop may be much higher. So, there's no reason to waste points. I mean, what I'm trying to say is if you pick a battle around the 2014.50, 2015 area on the short side to continue the trend down, as we have used 2059 on the short side before, there's no harm in taking a stop out. And if we get back down below 2014.50, being able to get back into the game on the short side again. So we've had a healthy little kind of rally back up and a kind of a move down here. And those are the numbers that I'm paying attention to on the December contract. All right, let's take a look at gold really quick because, all these things are kind of having some mojo together here, if you will. The 1218, let's just call it 1219 area that we talked about last week, closing above. That's the technical damage that you don't want to see for longs on gold right now. And, that was kind of the thing as we kind of crossed above the 1198 area and then crossed above that 1218 area. We really got some momentum past there. But as we kind of, breaking down below 1218, you've got the inflection points to pay attention to still 1198, let's call it 1199, rounded off 1200 neighborhood. And then you got 1218. So right now we're kind of in no man's land. I'd like to see it get back above 1218 for longs or pull back into 1199, 1200 for longs. Still not bearish on gold, but again, we're kind of in no man's land here. And again, I'd like to buy support around 1199, 1200, or buy breakouts above 1218, if that makes sense. Okay. Let's take a look at my favorite product to trade here. Excuse me. We'll pull this up pretty soon. Okay, so let's take a look at the 10-year. And you got something pretty cool going on for the 10-year here. You got 126.31 and a half, or let's just call it 127 weekly unfair highs, and we, closed above. I'm looking for a retest here. 127 neighborhood on the 10-year. Let's go to the daily. 126.29.30. Let's just call that 127. So you've got some massive support around 127 on the 10-year. And if the market kind of continues to trail down here, and I don't know, fundamentally speaking, I know there's some concern out there, oil prices and economies revolving around oil. And, it's just, personally, I think, that price of oil, which is a huge savings to the normal Joe out there in quite a few companies, is going to trickle in, and the market always forecasts that ahead of time. It doesn't wait for numbers sometimes. It's kind of a verifiable fact, actually, and a pattern, if you will. So that being said, the S&Ps, they may rally, and then the notes may come down into the support. But right now we've reached some targets on the S&Ps, and I'm looking at that note S&P relationship here. We may have seen a little bit of a top on the S&Ps rallying back that far this morning, and if we rally back up north on the S&Ps, the 10-year may not see this 127 area, but if we do see 127, God, I've said a lot of what ifs there, huh? If we do see 127, again, I think that's a high probability setup, and stops can be oriented around that from the long side. Okay, let's see here. I want to pull up silver really quick. Okay, so here's the weekly on silver. We came up into, let's just look at this inflection point, 1703. Kind of trading below there right now. This is March silver. So we've reached some targets there, had a little bit of noise above. Still on the downside here on silver, and if we get back down below 1675, which has been a very important number for a while, silver may start seeing some downward movement here. We're going to be right back, folks, after the first break. We're going to look at some picks off the scanner, and then we're going to try to move forward with a couple of currencies. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rose, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. I've got Apple on the screen. Hope you're seeing that. Just another, situation where we look for these high probability setups, and as breadth was turning negative, you've got some. I wouldn't call this a high beta stock by any means. This thing's been kind of an animal on its own feed. That don't even make sense, but this is a different animal. So as we had broke below the support area on 115.51, we came back and almost retested. It reached a high of 114.85. That's in the general neighborhood. Again, these inflection points aren't going to be to the tick every time, and I don't think you should patiently wait. Sometimes it's better to get your toe in the water a little early. Sometimes, I had a friend down in Florida I was trading with. He was a Vietnam veteran. In the thick of it. Just had a lot of stories, and respected the guy very much for what he did for our country and all that. But he had this really kind of comical rule. Whenever he wanted to get to a trade, he'd always wait. He'd set a timer and wait 2 minutes. And 70% of the time he seemed to be right on that. He'd get a better fill, put it that way. It was kind of weird. But what I'm trying to say is around some of these inflection points, you're going to have a little noise. You're going to sometimes breach them. Sometimes you're never going to get there. So I wouldn't set everything to the tick on these things. So what do you do with Apple now? So I was just presenting that, you get some high probability situations sometimes around these inflection points. And if you turn the rents the same way based on the breadth being in your favor, in my opinion, you can go wrong, but it's going to put the odds a little bit in your favor. So what do we do now? 109.73. We got this thing kind of sitting here. We mark it 110.70. Friday's close 109.73. Here's the short-term inflection points, 111.35. So again, where's the edge? I think we've had, and let's just go back to the S&Ps here, and then we're going to look at the NASDAQ. Weekly 2014, 50, 2015 on the weekly were those big numbers we've hit on this morning. But let's take a look at the NASDAQ. And as the S&Ps also have had a new profile up here, this is the December contract again. NASDAQ right in the middle of a fair auction, and we've got a new profile low here lining up with the previous profile high. We do not have to go down and touch this, folks. This is just inflection points to be aware of. Here's the daily situation. NASDAQ a little bit stronger than the S&Ps. Apple's probably one big reason always, but as you can see, we closed below, go back and retested this on Friday, and that probably was to the tick. Here we go, 42.54, 42.55. That unfair low was 42.60, so about 5 points off there with a little bit of noise. So what's this all mean for Apple? I think the S&Ps are that 2015 area are probably a big number, and Apple, how do you trade it? Let's just go right back to it. If I can find it, here we go. And 111.35, and we're trading 110.73 right now. Could be somewhat of a resistance area based on the S&P 2015, kind of in the same, I guess, rally back point. You've got Navigator really on a short-term basis, not showing any divergences here. I like the way these darker shaded bars are on Navigator trailing down. Again, I think Apple could go a little bit lower here and possibly do a flush below 109.35. But again, put your stops in, folks, and where do you put them? I think you first of all put them above 111.35, and then you just kind of wait patiently. And if we get back below there, if we don't, we could easily see 114.67 and even higher. So you got to take a look at the S&Ps when you're trading Apple right now. Let's take another look at something that I've been seriously fundamentally involved with, at least. That 242, 243 area, which is the weekly unfair lows, daily unfair lows on Tesla, this thing hadn't really shown a lot of interest at all. We've reached a low of 204.50. I think we're going to go below 200 just to do it. We may not do it today. The inflection points to pay attention to on Tesla, 215.82, 216 rounded off up top. I hear the music. We'll be right back, cover a couple other things, and get into
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Just listen. Hi, guys. Still reeling from the trip, guys. All right. We're taking a look at the Shanghai here. I just wanted to get into this before we talked about something else involving the stocks. Here's the, let's see here. Where are we at? Here we go. Here's the October 26, 27 area when we came down. And this is kind of why I want to point this out. Obviously, this is the long-term chart, the weekly on the Shanghai, and we were obviously up in an uptrend before then. We had a little bit of a pullback from around October 6th week. But again, on the 27th, we reached a bottom inflection point here around this 2272.50. Okay, and the price action that day was 2279.84. So 7 points on a long-term basis right into the inflection point with a little bit of noise factor, 7 points. So on the 27th, and I want to show you this. I've got some currencies up, and I'm looking at the Aussie dollar, by the way, and looking at the red across the grid here on our cells. We're going to talk about the scanner in just a little bit. But as we look at the Shanghai Composite, and I'm going to pull up the charts here on the Shanghai. I've got the Shanghai up. I've got the weekly sitting here. I've got the daily. So I'm going to look at our weekly chart here. And wow, we going to take out our in-between, and I'm going to go back here, and there's the July 11th. So on a long-term basis, since July 11th, we've been breadth positive, okay, on a long-term basis. Okay, so going back to our chart here, just want to show you this. There is July 11th, somewhere in there. Okay, so breadth turned positive then, and we're going to scale back just a little bit here. What in the world is wrong with this chart? Okay, okay, here is, okay, there we go. So there's a signal on a long-term basis when we started saying, okay, it's time to get on board on the long side, right? And what a ride it's been. And that's been about a 33% move up in the Shanghai itself. So, but let's take a look at that. And again, going back and picking that date here, October 27, 2014, coming back down to the inflection point. The reason I'm pointing this out is because you can use this breadth situation, in my opinion, in your favor. Here's the Shanghai. Let's just take out the middle ground just to kind of get rid of that. We'll explain that later. And there's November 20th. There's November 19th. Reset this. Come on. And there's October 29th, and there's October 28th. So as we came down and we started bouncing off those unfair lows on the weekly, we started getting breadth positive on the daily. We had a little bit of a blip there, but we're still breadth positive, and that's that October 27th, 28th, 29th. It happened between the 28th and 29th on our breadth turning positive, which is a formula that we use. And when we had a little bit of noise there, it didn't give you a chance at all really to start looking at this from the short side because we never got really negative in a large way. We've been pretty much breadth positive the whole way on the daily and the weekly. The weekly since July 11th and the daily since October 27th. So as we look at this and we go back to the daily, there's October 28th on the daily. And the thing I'm trying to say here really is as we look at these things, let me blow this up a little bit. As we look at these things happening, there's a 28th, there's a 29th. We came off the weekly unfair lows. Then we started getting conviction above unfair highs on the index itself. Now, it's really important to use the breadth and the index inflection points together. So as we got off the weekly unfair lows, just to restate this again, and then closed above the daily unfair highs, then, in my opinion, by all means, there was really not a lot of reasons to be short here. And as we started clearing some of these profiles, using them to regulate up, from that October 27th, 28th area, we talked about this the other day. We talked about a new profile appearing here, and this still being relatively breadth positive now, or very breadth positive, and this action right here being above profiles being very, very bullish, being that we have a new profile appear well below price action. So on a long-term basis, intermediate-term basis, this has still got some legs to it, in my opinion. And if you're trading the Shanghai, take a look at the 240. You also had some great inflection points here. And remember, this profile appeared there. So this profile appeared immediately as we opened here, and that inflection point from a support area, and that low was 2808, and the unfair lows were 2804, very, very close, provided a decent chance to get longs in on this. Now, if you're using money management rules, trailing stops, what have you, I mean, there's no question we had a 10% volatility day on the Shanghai not too long ago. So let me pull this back up. Okay. So, as this thing kind of rattles around here, you definitely need to, start taking a look at money management rules and not giving back everything, even though we haven't crossed any borders. 300 point pullback in the Shanghai is nothing to sneeze at. So again, usually I personally use the 240s to regulate a trade up or down. But again, the breadth being positive kind of puts some edge in, at least on my side of the fence, in my opinion. Let's go back to the S&Ps really quick. Where's my... I lost something here. Here we go. As we look at, the S&P's kind of, drifting around down here, I just wanted to point out that 214.5, 215 area has got to hold. Wait a minute. Let's see. What am I doing here? We got my chart back? Okay. Okay, great. Okay. Sorry about that, guys. Okay. All right, so that 215 area, general area, is going to have to hold, and that's going to be a rocker arm for a lot of the stocks in the S&P. So what we're going to do here is, after we look at our currency that I wanted to pull up, I'll pull their breath back in. And you guys, this Australian dollar, just want to keep our eye on that. That's been something that I've been extremely bearish on. And our landscape chart here, this is the level of the market, so to speak. We're almost down below 82. Okay, but let's take a look at some of these stocks in the S&P, and let's just pull up the S&P. Let's wait for that to load. Let me get these shaying off here. I don't think anybody's paying attention to this, watching this show right now. Okay. So as we look at some of these S&P stocks, and we've got about 6 minutes before the break here, I want to find stocks. I'm going to take a look at this. I want to find stocks that are sitting on weekly inflection points. First of all, I want to take a look at stocks that are sitting at the top of my weekly unfair highs. So again, I'm going to pull this up, and it's going to give me a host of stocks, and it looks to me that that's just ballparking it. That looks like it's about 30 stocks, okay? So I want to take a look at some of these. Some of these have obviously, been in breaking below profiles. I want to take a look at Plum Creek Timber Company, PCL, okay? So I'm going to pull up PCL, and I'm just going to check out what's going on with this stock. Sorry about that. How do I get that off? Remove. Okay, here we go. All right, so doesn't have a lot of relevance to the S&Ps, but sitting at an inflection point where we've got a kind of a DMZ between 41.34 and 41.04. Okay, so you got about a 30-cent range there. We've got, and I like the way the stock's acting. I like the chance that it has to use that DMC to be able to move north a little bit. And again, this is not a day trader's dream, but I like the way it's kind of stayed above profiles, regulated itself up, and now is sitting, has poked its head above here and it's kind of consolidating. I like PCL to go north again based on some other things that we just saw. I like the way this weekly navigator is looking, actually. I like this from the long side with stops below that DMC at 41 based on your appetite for risk, and by all means below 40, 49. That is a very boring situation, and I like boring, but we're going to take a look at a couple other ones here. I'm going to take a look at Morgan Stanley, MS. That's something that's very, very tradable, and that's based on the scanner here. I'm going to look at Morgan Stanley right here because I like top two, and we've had some pullbacks here, so let me take a look at this. Here's Morgan Stanley. We had that close above, pullback into unfair highs. Here's the really good, in my opinion, high probability setup, 36.13. We're trading 36.25. Actually, we're trading 36. 40 right now, pre-market, it looks like. Even though we've come in here and started showing some technical damage on the daily, you've got a previous unfair high sitting at 3601. Right? Remember, previous profiles have a big relevance on what's going on in the current landscape. So 3601, unfair highs on the daily, and guess what? 3613 weekly current unfair highs. So Morgan Stanley, and this is one of the reasons we created this scanner was to not miss opportunities like this. And a lot of those institutional guys just love this. I mean, they go, okay, all right, 3613, and there's my daily situation. Okay. And we're sitting right there. We're actually sitting a little bit above there. Let me see here again. Yeah. So what it's doing is it's allowing you to basically focus on an inflection point, on a pullback into that inflection point. And here's the situation on the landscape. So, we have current inflection points that we've got below and had some technical damage on the daily side, but we've got this big weekly number sitting here that you can leverage off of on Morgan Stanley. Let's just pick out a couple more. And the bane of my existence, let's look at this thing, American Express. I used to hate trade. This stock used to have a specialist that me and a couple of guys wanted to murder back in the late 90s. If you've ever traded listed stocks and had a personal vendetta against a specialist, this is one of them that I had. All right, American Express, 90.68 unfair highs on the weekly. I like this, but I also like the ability to put stops oriented around this thing. I like it because it's consolidated, moved higher, and now it's just consolidating again. And American Express here, we got the 90.50 sitting here, the daily inflection point, which is also provided. You don't even need the charts, really. American Express, AXP, there's the 90.68, and there's the 90.50. So that little DMZ, big time support. I know we've had this little breakage in the 60s and 240s, but now you've got a really high probability situation sitting in front of you. And the cool thing is you know where to put the stops. And I don't know if the market's going to bounce or not. We've talked about the S&Ps as a guidance tool, for some of the S&P stocks, but we may rattle around down here. But if we can get the S&Ps going above 2015, I think we could have some legs into 2032. Oil's kind of playing itself out right now, so that's kind of the way I'm looking at that. We've taken a look at some scanner stocks here that have been some really easy situations, blindly pulling those up without putting a lot of thought into it. And that's kind of what you want to do as far as trading technicals. Is you want to kind of pull up some things that meet the criteria, take a look at them, maybe have some action after you do a little more research. Here's the situation on crude oil. Everybody's watching crude oil here. Got about 10 seconds before break. Nothing to talk about on the weekly. This has been a real serious pullback in crude oil without anybody having to be told that. But we're going to talk about some inflection points on the short term on crude oil when we come back. So, a couple of minutes, guys. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi, guys. Welcome back to the show. We were taking a look at some scanner picks here, and what I was doing is I just put a simple filter in here, which kind of lets me see about 30 things meeting the criteria. It's actually automatically shuffling and adjusting real time based on the real time feed that's coming into this, or coming into, we use eSignal data to populate the signals or cells on here, if you will. And we were taking a look at Morgan Stanley. I also was just blindly going through this, looking at dual confirmation inflection point lineups, and one of them was Micron Technologies. So I pulled up MU, and I've got MU right now. Here's the weekly situation. I love this. I really like this setup. 34 unfair highs on Micron, and then you've got 33.89 unfair lows on the daily. So what does that look like? I'm going to pull up our multi-time frame view, and I really, really like the way this thing presents the facts to me so quickly. There it is. Okay, so you're sitting right above weekly unfair highs, and then you're sitting right on top of daily unfair lows, 240. So, and you're above 60. So it's in that. You take a look at what's happened here. This is the kind of thing you like to see, and you like to see these setups like this. Let's take a look at First Energy, FE, similar situation. Not not totally similar, but it's again maybe something we need to take a look at. Here we go. FE, and this is going to give you a little bit of a, what do you call it? Confidence interval, if you will. So here we go. Here's the situation on First Energy Corp. Unfair highs 37.45, and by the way, I don't really have to reference the chart for that. First Energy, I'm going to say, okay, here's the 37.45. As you can see, I mouse over. Very cool, top of the box, and top of the box 37.72. So I like to look at these DMZs, 37.45 and then 37.72. I like this, and I like the ability to get long above 37.72. And I know that sounds crazy. The market's maybe in an iffy situation, all's out there and everything. But again, I mean, this is the kind of stock, if you're short, you got to be scratching your head and wondering why your stock is not coming in and with the market. And this is the kind of situations that I love. And I love this little consolidation here. So clearing the top of that DMZ will kind of be a breakout situation, and a close above it will be like super damning for the shorts. And I'm not probably a bigger fan of shorting things than going long, but again, you can't argue with some of the setups here. Wyndham Worldwide Corp, top, bottom, lining up, boom, here we go. And there you have it. And this is another ripe opportunity from the long side. I'm going to pull this up, WYN. I've got 82.94 and 82.52 as we just pulled it up. WYN, boom, here we go. Got that weekly pullback into those unfair highs. Not saying we need to, go higher, but again, you've got kind of some odds situations on your side here. 82.94, just like that inflection point we talked about on the scanner, and then you've got 82.53. So you got that DMZ. I like this. It's traveled the entire profile downward on the daily. You're sitting right above weekly unfair highs on this. Wyndham Worldwide Corp, I love being able to put stops below this 82.53 area based on your appetite for risk, which would also allow you to kind of take advantage of being in the fair auction on the weekly too. Guys, thanks for bearing with me. I was traveling Thursday and Friday, and then definitely all weekend. It's good to be back. You guys have a good day trading. Stay tuned for Steve Rhodes. And take a look at the scanner, get a trial of it. Maybe you can use that webinar archive that we've got, and we'll be back again tomorrow, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.